Good evening, guys, and welcome to yet another session. Like we all know, this session is always very interesting for me, or very good for me. It's always good having you guys. We get to pick topics and then discuss them, and then try to like decipher what they mean, and then how we can basically use them, or how they more or less affect our trading. And today we're still doing something like that. Do you understand? Because we started this whole series where we're picking things that more or less sound very very I don't want to say sophisticated, but then to a certain level, they sound very abstract. Do you understand? And most times you start wondering, okay, do I, as a trader, do I actually need this thing? This whole thing where people are like making it look so important. Is it a must for me to learn it? If I don't learn it, will I be able to like trade? Do you understand? That's the same thing we're still trying to do today. So today we're picking one of those things to discuss. Do you understand? Look at what it is on a fundamental level, and then how can we use it, or how can we implement it in trading? And what's that thing? What's that thing is the whole idea of liquidity. So we're going to be looking at liquidity and then liquidity grab. Liquidity grab is basically how you use it. Do you understand? So let me go to ADUSD. Okay, this is wild. Not bad actually. So we're going to be looking at the whole idea of liquidity. Let me write that down. Liquidity. Liquidity. So now, what's this person saying? Please, those asking questions would time for questions will reach very soon. Yeah. So just keep calm for now. So as I was saying, I said we're going to be looking at liquidity and then the whole idea of liquidity grab. So if we look at liquidity on a fundamental level, if you look at it in terms of accounting or economics or in terms of finance, it basically just means money. Do you understand? Not just money, but then money that you can spend at any point in time. So when someone says they have let's say liquid cash, it means okay, I can like touch it. Do you understand? I can easily spend it, that sort of stuff. So when it comes to the market, what do we mean by liquidity? It's still the idea of money. Do you understand? But then it now comes back towards that whole idea of the market actually needs money to move. The market needs to be liquid to actually move. So what brings in this liquidity is the whole idea of buys and sells. Do you understand? So the more orders you have in the market to actually make the market liquid. Do you understand? That's one side of it. Now, another side of it is that you actually need liquidity in the market for people to be paid. Are you guys getting the idea? So if I take a buy trade and then I'm taking profits, there needs to be money in the market for me to take. Do you understand? Because I'm not taking free money. And then that money is not, it's not like the market is just printing in new money. No, the market is actually, it's more or less money that has been taken from another person. Do you understand? So the whole idea is coming from this whole thing of, okay, we understand that before we get paid in the market, we need money to be in the market. Do you understand? And the market is not printing any new money. So how do we get that whole liquidity in the market? It's more or less taking out traders. Do you understand? So taking out people that are already in the market. So if you hear, you would always hear people that use things like liquidity to trade, always laughing at trader, especially we that use support and resistance to trade that, oh, your stop loss is my take profit, I'll be what safe. Something like that. Do you understand? It's that whole idea that, oh, the market has to take people out before it can actually pay people. Do you understand? Now, this liquidity most times is all it's or people always feel that the whole thing is, or people say that it's actually because me, I don't want to believe that it's actually so that that it's being engineered. Engineered in the sense that it happens intentionally. Do you understand? So someone will intentionally want to take out my stop loss so that there'll be market in the market, so there'll be money in the market so that they can take profits. Do you understand? Now there are a whole lot of reasons why I don't want to believe that statement. But one of them is the whole idea that, first of all, my account is too small for someone that has millions of dollars to come and be chasing my stop loss. So that's the whole idea. And I honestly don't encourage the fact that traders look at it from that perspective. Because if you look at it from that perspective, then no one is safe. Do you get? So if you take your trade now, market is always after you, market is always after you. Then if market is always after you, how come people are still profitable? Do you understand? So normal, I don't like looking at it from that perspective, but then that's like an aside. So when it comes to liquidity on our charts now, I've more or less looked at liquidity, like what it means on a fundamental level and then on a basic level. Now, when it comes to liquidity on our charts now, it's more or less the likely place or the place that has the most likelihood that traders would place their stop losses. Do you understand? Above highs and then lows. So in a case where I have like a downtrend, where price is creating like lower lows, lower high, lower low. If I enter a trade here, the place I would most likely place my stop loss is slightly above here, a few pips above here. Do you understand? Now, why we do that is because now, those of you that have attended classes where they teach how to put stop loss and take profit, why we said slightly above here is so that price doesn't take you out and then what? Reverse. Do you understand? Now, the process of price coming to weak this level here, do you understand? It's more or less to take out stop losses that are on top here. That's the whole idea of price taking out liquidity, or the whole idea of liquidity grab, whatever you want to call it. Do you understand? So liquidity now, in this case, is the stop loss is resting above here. Price coming to take it is the whole idea of liquidity sweep, liquidity grab, whatever you want to call it. Do you understand? Now, price is coming to take out those stop losses so that people that are going to ride this market to the downside, that's like the backstory behind it too. People that are riding this market to the downside now will more or less have money when they take profits. Are you guys getting the idea?
Yes, sir. Yes, sir. Yes, sir.
So that they get
Yes, sir. Yes, sir.
good. So
Yes, sir.
that's like roughly
Yes,
the
sir.
whole idea of the thing. Do you understand? So the idea is more or less, let me see. Richie said no, sir. So what I'm trying to explain is just that whole idea of liquidity. Now, like I said, liquidity is basically where your stop losses will most likely be resting. Do you understand? The obvious places that stop losses will always be. Do you understand? So the whole, let's say, in this case now, if we sell, let's say around here, and then we're looking at price reversing from there to the downside, we will most likely drop our stop losses above here. Do you understand? Because that's that level that once price changes, or sorry, once price stops, the market is changing. In an uptrend, is going to be in
He
an uptrend,
has to
it's
break
going
it.
to be above the higher lows. Do you understand? That's where it's going to be in an uptrend. In a ranging market, it's going to be above the highs and then lows. Do you understand? So the whole thing there is that for price to actually like for those that are going to sell these markets to make profits, there needs to be people that will take losses. Do you understand? Because if all of us actually make money, then there will be no money to pay anybody. Do you get? So price more or less goes back up to go and like take these people that are more or less putting their stop losses up here. Do you understand? Take you out and then decide to what? Reverse to the downside. Are you guys getting the idea? So this whole process of price going back to like take you out before selling to the downside is the whole idea of liquidity grab, liquidity sweep, liquidity chasing, whatever you want to call it. Do you understand? That's the whole idea of it. Do you understand? It's the whole idea that, okay, price has to go back, take out stop losses before actually going in that direction. I
So
guys
is
getting
it
the idea.
safer? Is it safer to take your stop loss up to the last lower high?
The thing here is, yeah, just always drop it a few pips above. Do you understand? Not exactly at that high there. Do you understand?
Yes, yes, yes.
Good. So that's more or less the advice I would give. And honestly,
Okay. That pullback, is it what they call inducement?
inducement, inducement. I will have to research that because inducement now, if it more or less talks about people actually artificially pushing price to that place, then it's actually inducement.
Artificially.
artificially, that's intentionally.
Uh,
You get what I mean? Yeah.
okay, like larger institutions, or is this?
Yes, 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 yes.
Are you talking about retail traders?
No, retail traders get money to push markets reach there.
So institutions, right?
Yes.
Okay.
Yeah. So that's basically, if you're looking at inducement from that perspective, then yeah, that's inducement. But then this is supposed to be like a normal retracement. And then personally, there are a lot of reasons why I don't like looking at the market from this perspective, because it screams fear of losing. Do you understand? So now, if you jump on trades here, do you understand? If you jump on trades here at this lower high and they are looking to sell to the downside, just put your stop loss a few pips above here. Don't worry about the whole idea of whether price will take you out on liquidity or not. When liquidity should concern you, it's if that is your trading system or trading strategy. What do I mean by your trading system or strategy? So you know how we have different zones of entering the market at. Do you understand? If I'm using liquidity to enter the market now, if I see a downtrend, before I sell, I would have to wait for price to come back past this high here to the upside. Do you understand? Price should pass it and then do a reversal on that lower time. So this whole above this high here now becomes my zone. Do you understand? Are you guys getting the idea?
Yes, yes.
So once price stops there now, I'll be looking at price reversing from there and then selling to the downside. Same thing with an uptrend. If price creates a higher high now, where I'll be looking to buy will be a few pips below here. That's if I'm using liquidity as my strategy to trade. Once price gets back to this place now, I'll be looking at price actually stopping here and then reversing to the upside. So once price get there, I'll be looking to buy. That's if I'm entering aggressively, or I'll drop to a lower time frame and then look for entry confirmations. So we got something like that this week on GBP USD. I think it was on Tuesday. I was teaching the mastery class here. And then the mastery class guys here mostly learn SMC. And then I was telling them about the whole idea of liquidity, because one of them was using it as a trading strategy. So we're looking at it and then how we can use it to trade. And I don't want to say the universe blessed us. God just blessed us with a trade that actually followed liquidity that day. That day. So I'm actually going to look at that one. I think that's like the first time I've actually seen liquidity work. Now, as I am going to go charts to go and look at this here, I want to just say a couple of things. First of all, it's not a must to use this thing to trade. If you're using this thing to trade, then know that it's more or less like a zone. So it's like using something like support and resistance, trend lines of Fibonacci, do you understand? Or other blocks. It's still the same thing. Do you understand? So don't confuse it. Don't look at it like, oh, it's something so abstract. Do you understand? It's not. It's something basic. It's a zone. Do you understand? When I say it's a zone, it means it's more or less there to show you where there's a potential that price will reverse, or where there's a high probability that price will actually reverse. That's the work. Simply that, and then you're looking to enter your trades from those levels. Are you guys getting the idea? So nobody should stress about it and then feel like the whole thing is another thing that I have to. If I'm not using it, I'm not making money. And personally, self, this is like the first time I'm talking about something like liquidity. No, this is the second time I spoke about it in the mastery class this week. But then this is like the second time I'm talking about it. I don't use it to trade. That was GBP USD. Was it GBP USD or Euro USD on Tuesday? Off. Mm. Whoa, shit. See this nice trade on GBP USD, and we have already missed it. Because price has already tapped that level and then it's selling to the downside already. Hey, Wahala. Where that point where price do liquidity grab, I think it was Euro USD. So, oh, sorry. Hi. So if you look at this market, you see that price just created, it was in an uptrend first of all. So the market was creating series of like higher highs, higher low, then another higher high. Are you guys following? Can you guys
Yes, sir.
good? So now price started retracing to the downside. As traders now are looking at where would
We can hear you.
yeah. As traders now are looking at where would this retracement stop for a reversal to the upside. So if liquidity is more or less our strategy now, what we'll be looking at is for price to come back. Sorry, let me see. We'll be looking at price coming back, taking out this level before actually was going to the upside. Are you guys getting the idea?
Yes, sir.
Good. So let me. So the moment price actually got to this level here now, the moment price actually went below that level, that's when you decide to drop to a lower time frame to look for confirmation, or you can actually start jumping on the buys somewhere below here. Do you understand? And then you target the 1 hour highs, something like this. Price did not hit the take profits. Damn, that's crazy. But you guys get the idea, yeah?
Yes.
So you can see that price actually had to like go below that level, or immediately price went below that level, actually pushed to the upside. Then I think CPI was this, no, FOMC was this week, yeah?
Last. Yeah. It was this week, last week.
Sorry, it was last week. Yeah. So
Yeah.
I think the trade I took on NZD USD, I did not actually share it with you guys. It was too risky for me to give you guys. I think it still respected the whole idea of liquidity. So if you look at this market, you see that price was creating a series of like highs, low, then higher high. Price now shifted structure. That's it broke the higher low to the downside and then created lower high and then another lower low here and then started retracing to the upside. Do you understand? Me, I was already selling at this point here. This where this candlestick is. Because normal, I was looking at the 0.618 on the Fibonacci. But then before price sold, price actually went up. And then in cases of news events, yeah, most times I don't put my stop loss because I know that price will most likely want to go and take out liquidity before actually dropping. Do you understand? It actually happens. So price went up. As price got to this level now, see, price actually broke above this high here. Do you understand? Sorry, it did not break, like it passed it. You can see that the wick did not, sorry, the body of the candlestick did not close. It's just the wick that passed it. Next thing, price actually started dumping to the downside. I was on this sell. I actually exited around here. And then price actually continued selling to the downside. Do you guys get the idea?
Yes.
Yes, sir.
Good. Who has any question regarding this thing?
So what strategy did you say you used in entering this trade again?
It was Fibonacci. This was what I did that day. One sec. This was what I did that day. Something like this. Sorry. Plots Fibonacci from the most recent lower high to lower low, something like this. So when I came to the market, I actually forgot that there was FOMC that day. So when I came, price already pushed past that 0.618. So I started mounting sells, yeah, and then waiting for price to come to the downside. But then price actually went above that level before actually dropping. So if I actually put my stop loss above here, price would actually have like taken me out before actually selling to the downside. So the whole idea that I not actually put stop loss was what saved me that day. You guys get the idea, yeah? So now, this whole thing is just another approach of trading. Do you understand? Another approach of entering your trades. So what you could do is you can backtest all these things and then see which one you're much more comfortable with. The essence of this class now is to try to decipher what this whole liquidity thing is, so that you stop being scared of it and then stop being terrified by it and then feeling like, oh, it's one big thing that we will make your trading, you'll not be having losses again. There are times that you still take losses. In a case where price comes here and then shift structure, you take a loss. Do you understand? In times where price doesn't get to that level, you don't have a trade. It's just like using any other zone in the market to trade. It's a high probability trading system. So it's definitely going to have wins and losses. But then wins, if you actually follow it well, do you understand? Your wins are supposed to cover up for your losses, that sort of stuff. Do you guys get the idea? Someone said in the comments that as a beginner, no shall trade, that's stop loss. Please, I'm not encouraging you trading without a stop loss. Do you get? Even it's because to a certain level, I understood the risk. Do you get? I understood what I was doing. Do you get? I knew that if price actually took me out, like if price actually shifted structure, I would like take a heavy loss. And it's not like I was okay with it, but I understood it and accepted it. Do you understand? So someone said, can we call it liquidity grab or honestly, whatever I call it, as long as you know how to use it, I don't really care, as long as it makes money for you. That's basically it. The most important thing is that once somebody mentions it, it should not sound like something so abstract and then something so complicated to you. So we still have time.
So, where you want to sell.
What did you say? What did you say? Because I did not get that. Someone said something, but then I did not hear that.
Okay, I said, like, let's say you want to sell from the resistance. So what matters is that price candlestick body should not close above your zone.
Yes, that sort of stuff. So if a body of candlestick closes above it, is the market more or less shifting structure?
Okay.
Any other question? If there's no other question, that's how today too will not last long. Please, how do I know a valid order block? Okay, so I'm going to help you out. Yeah. So here's the thing. An order block is more or less the opposite candlestick. Do you understand? Before that move. So the last one before the move is the valid order block. Whether which one is, I feel that question is still coming from, let me just make an analogy. Yeah? Are you asking that question from a perspective of, if I have a market like this, if I have a market like this where price is creating higher high, higher low, higher high, higher low, higher high, and then I have like an order block here, I got another order block here, and then down here too, I have another order block. Are you asking within these three, which one is important? Or you're asking if, like in this whole push to the upside now, I have like three opposite candles down here before the move started. Do you understand? So in that case, which one are you asking? Is it the first analogy I did, or is this second one? Is it the first illustration or this second one? Yes, the second one. In that case, yeah, just follow the definition, which says that the last one before the move. So in this case now, if this one down here was the last one before price started pushing up, then use that one. Any other ones that come before price hits the top, those ones don't matter. It's the one before the move actually started pushing to the upside. That's the one at like the low. You get the idea, yeah? Please, is liquidity really different from support and resistance strategy? Yeah, to a certain level. Just use the last one. This guy saying there will be a lot of red candles there. Just use the last one. Someone said, is liquidity really different from support and resistance strategy? Well, here's the thing. Support and resistance is more or less you looking to trade at that low. Do you understand? So in this case now, sorry, one sec. In this case now, for using support and resistance to trade, we are going to like look to enter the trade at this level down here. Do you understand? But then liquidity, you want to enter below that level. You're waiting for price to pass that level first before you actually look to take your trade, that sort of stuff. You get the idea, yeah?
Yes, sir. Thank you.
Yeah, no worries. Any other questions before we call it a day? So for those of you just coming, yeah, well, the session is about to end. So I'm going to be posting the link to the video on the shit. These people just took out.
Sorry, sir.
Yeah. They'll put on the gen very soon. So one sec, let me send the link to the group. Please, those that will be watching this video later, let's see, can I use 2 time frames alone for my analysis? That question. I cannot give you an absolute yes or no, because you see, one thing with trading, there's no absolute right way or absolute wrong way. Do you understand? You might be using 2 time frames and then it could be working for you. Do you understand? So, but then what I'll tell you is that it's advisable that you have a directional time frame. That's where you're looking for the direction of the trade at. It's advisable that you have a time frame where you're looking to continue that trend at. That's your mid time frame where you're looking to get your zones at. Then it's still advisable for you to have your entry time frame. Do you understand?
Okay, boss. Okay, boss. Okay, boss.
Who is that person?
Sorry, one of the major things
Your network is very bad.
In my strategy was okay. I do make use of the 4 hour, 1 hour.
But I blew your accounts this past week.
What did you say?
I said I blew your accounts this past week.
How did you blow
accounts?
We did not take any loss this week now on the Sigma group.
No, it's just me and my own personal. I'm just trying to
So in that case, yeah, honestly,
you have to blow my account too.
No, please. In that case, yeah, the important thing is that you're learning. Do you understand? Don't feel too bad about it. Do you get? Just learn from it. Do you understand? Look at where you can actually improve.
100.
Yeah.
Okay.
How many people are still holding
no to account blowing?
Can you hear me now, please?
Yeah, I can hear you. Continue.
Okay, I said I usually make use of the 4 hour, 1 hour, and 4 hour time frame to get my trend.
Yes.
My 1 hour, my 1 hour to get my levels. Then my 5 minutes for entry where I look for break of structure or shift in market structure like that. But of a sudden like that, I discovered that I was getting few trades because I do make use of the Fibonacci too.
Yeah.
So I was getting like few trades like that. So and the 1 hour zones, at times I might get a shift in market structure in the 1 hour zone. But let me say, when there's a shift in market structure in the 1 hour zone, in the 4 hour time frame, you discover that it's just a weak rejection like that.
Yes.
And it was like, yes, it was like being manipulative for me. So I do journal my trades a lot, and then I do like take screenshots of my entries. And so I discovered that okay, one of my major problems then was my entry. Then I like decided that okay, I'll use the 4 hour time frame for both the trend and for both the trend identification and marking of zones. That is, I'll still draw my Fibonacci on the 4 hour because I discovered that the 4 hour time frame is a very strong and this thing. And then I'll use like the 15 minutes time frame for confirmation. And okay, I backtested a little and I discovered that okay, it was like actually giving me certain things I want, even though I know that the losses are inevitable. But at least I don't want a situation where I would like in a week, rather than having 1 or 2 trades. Okay, I was like, why not get like 3 or 4 trades like that, even though I know the risk exposure will be more. But that is one of the essence of trading, to be exposed. Since I know I can't avoid the losses, it's just to calculate my probability. So that was why I was asking earlier if it's possible for me to use the 4-hour time frame and the 50-minute time frame only.
Okay, I get the idea
I
where
don't know
you're
if you
coming
get.
from, yeah. And honestly, like I said earlier, my answer is going to be as long as it works, you can keep doing that. Do you understand? And I get the perspective you're coming from. That would actually work. Do you understand? That would actually work. But I feel you actually get lesser trades, but then you
Yes.
get the confirmation on the 15 minutes. How will I put it? It's easier to like get your zone on the 4-hour and then get the confirmation on the 15 minutes. Do you understand? So that whole thing of whether the 1 hour shifted or not will tend to not affect you. Because the 1 hour shift in that case, now once price gets to a 4-hour zone, it will not really matter.
Yes.
Do you understand? So I get the perspective you're coming from, and that's actually like a good point you get. So you can stick to that actually. Yeah.
All right. Thank you, sir.
So we'll not be taking any other questions. This guy asking about fair value gap and psychological levels. No worries, we are going to do it very soon. Do you understand? I think maybe if we don't have any topic, because I listed these things out, I'll check the first video. If we don't have any other one to talk about, then we'll go into that. And then another thing is, for those of you that joined late, I'm going to be uploading the video to YouTube and then sending the link to the free group here, the free community. So please, if you are not on the group, you can use the link in the chat section to actually join. Do you understand? I've been posting the link. You can use it to join so that you don't miss the video, because that's the only way I'm going to see it. I think I might still post it on my Instagram also. So that's being said, we've come to the end of this session.
Is that not going?
What? We've come to.
Is that not going to be giveaway? USDT giveaway.
At time 7.
Alpha, make everybody just forward me their address. We just send like.
I will make wallet now. Scooby.
Go and paste it on.
May una paste 50-50 for everybody.
Even if not
50-50 for everybody, 50-50.
As I was saying, those that want
space.
Please like and then subscribe to the page. I'll do giveaway soon for you guys. I'm still thinking of what to do exactly, but once I come up with something, I'll do for you guys. Yeah. So
I'll be around next week. I'll come see you by the grace of God.
No problem. I'll be looking forward to that.
No.
Yeah, take care, guys. Have a very wonderful evening, and then a very wonderful.
Thank you, sir. Thank you for your time. Thank you for your efforts. We appreciate, sir.
Yes. And I'll catch you guys later.